Good afternoon. Welcome to the TheoTrade Afternoon video. I'm Blake Young. Today is December 19th, 2024, and we're going to talk about safety plays based off free cash flow in this wild market. So we already have seen the big sell-off that happened on the S&P 500 based off the Fed. We see that major drop back to key support level, both with monkey bars and our channels up and down. And it could go either way at this point. It's sitting here at this inflection point, and it could go up or down roughly the same distance again within the next week. And that's what my expectations are. I don't really think we're going to chop sideways here. I think either we break through and duplicate this down to 570, or we bounce back up from 580 and retest 605. I don't think there's a lot of in between. But as I'm looking at positions that are safer, if I'm going to buy into these, we're going to go back to our discussion that we've talked about in the TheoTrade main room about free cash flow. So I started looking at stocks that were more resilient in this sell-off, that didn't continue to sell off the same way, and that also have free cash flow, meaning they have the life force. They have money coming through. They have leftover money that they can use to grow the company or pay their debt or anything else that they may want to do with that free cash flow. And it came down to there's only about 6 stocks that were resilient enough in my search that also had strong free cash flow. And those are Palantir, Apple, Alphabet or Google, Visa, and Nordstrom's. Yeah, Nordstrom's a little bit of a surprise. So let's go through these really quick and show you what I'm looking at. Starting with Palantir. Palantir does have positive free cash flow. They've got some growth in this company. So yes, it's a little bit overbought and overextended, but again, they have the money to do so. They are still seeing some growth. They've seen growth in earnings and free cash flow, and they have an amazing quick and current ratio. They've got a lot of strong fundamentals behind it. So rather than fade this, I'm looking at this previous high and the fact that we've already recovered everything from yesterday's open and showing no signs that we even had a 5% drop in some stocks. In fact, we're up 4.6 from yesterday's close, erasing everything and climbing up above the previous open. So I like Palantir for a retest of 80.91, the previous high, but likely continuing this long-term trend. This trend of the channel that it's been in already, if I move this channel higher, you're going to see those lower support level. If that's the case, I'm looking for a break above this high, and this channel is running about $5.50, so that would mean we're looking for 83, 85 over the next week or two. And I don't think 90 is off the radar either for Palantir. If you know me, you know I'm not a lover of Apple. In fact, I own no Apple products myself. And that doesn't mean that it's not a good investment. We can see that we've recovered most of the sell-off that happened yesterday. We've even touched the open back up through here. We are near the top of this channel. Now, the reason why this channel is so important for me, even though they do have positive free cash flow, they've got a lot of free cash available, this channel is important because it's been not just the channel over this last 6 months, it's over multiple years. You can go all the way back on Apple to 3 years, 5 years, go back to 2021, 2020, and this is the rate that it likes to climb at for days and weeks on end. So we are at the top of this channel. It's a little bit of a concern to me, but the fact that it was resilient going into this and recovered after that big wide candle, anything above today's high and back through yesterday's open does set us up for the breakout. If we break through 253, this channel's next target, and possibly before the end of the year, is all the way up to 270. So we could be looking at a $20 move, maybe an 8 to 10% move up in Apple. Now, Alphabet A, Google, has similar free cash flow that Apple does. They're very close as far as what they're making, profiting on those. And we're looking at this recovery here. It's not as clear. We've had a big sell-off. We've gapped up, closed down, and created what I would call an inside day or harami. So if you want confirmation, I don't mind selling here a put here because it's at the previous 52-week high. I don't mind that idea because you can get about 3% return on selling a put. However, if you want the confirmation, simply trade above today's high. If you trade above today's high, this trend could continue, and I'm looking at 205 and possibly all the way up to 210. But by the end of the year, we could be all the way back at 205, minimum retesting this previous high, which is still a $12 move, about a 7% recovery if we can clear today's high. So Google is a little bit less resilient in the sell-off, but it is setting up a good confirmation candle. If we simply trade above this high, then it is confirming a bounce off previous resistance as new support, a Harami pattern, which is a bullish setup, and 201, 205, and possibly 210 is on the targets for me on Google. Visa has a number of things going for it. And the first is that they have the highest of the free cash flow of the stocks we're talking about today. They have $9.39 of free cash flow available to the corporation. So we're talking about a lot of money sitting there and therefore a lot of resilience. It's also the holiday shopping season where 80% of all retail sales happen in this final quarter, and Visa benefits from transactions. They're not making money on the credit card balances, the interest rates. They make money off the transactions. So as people are buying anything, high, low, in between, they're making money as a percentage on all the transactions that are going on. And we're pushing higher and, again, erased pretty much everything that happened with the Fed yesterday, pushing back to the 52-week high. But this entire process through here has been able to slowly climb up after the gap. We've slowly climbed up another 5%. So that $15 move, that 5% from 300 to 315 roughly, I think we're set up to do another $15 and get up to 330, if not continue this big long-term trend. And you can kind of see the super trend that's happened on Visa ever since it bottomed out. You can see that's really the kind of the slope that it's running in. And so this pattern, this channel, yeah, it's about $12, $13, but that would put me on 330 by the first week of January. And that's when we'll start seeing the reversal of those transactions and the credit cards. But the thing to keep in mind that continuation higher is going to be all off the consumer spending during the holiday season. And so I think 330 is definitely an opportunity, and they have the highest free cash flow of the bunch. Now the last one is one that I didn't really expect. I was looking for stocks, trying to find those that had good free cash flow, that had some decent bounces in today's move that offset the sell-off. And this one was a little surprising. It is Nordstrom, JWN. As we look at Nordstrom, they have free cash flow. I would not have expected a lot of free cash flow, but they have free cash flow. And it's only 32 cents per share. Their sales per share are $89, so the return on sales is phenomenal. But as we're looking at this move, it really hasn't moved out of this range, and yet we get these huge days. Today is a 5.6% day. It is the one that took out everything. There's no other stock that have free cash flow that have overcome not just the sell-off that happened with the Fed, but cleared the high, closed above, knocked out the previous week, and could be poised to not only get back through 25, but I think this could be the setup to continue higher for Nordstrom's. Now I've got a channel off of this as well. It's a very long-term channel. It's not buying off the lows at this point, but I'm looking for 25.50. And if we can break through that high with the kind of day like this is, then we're talking about not just a 5% move, not just a 10% move, but potentially a 20% move higher in Nordstrom's. And that one, frankly, surprised me that there is that much resilience in a retail clothes company that I had thought kind of faded away. So this bounce and this recovery, not just because it's in this long-term channel, we've had big days like this before, but because it offset and fought back against the Fed behavior, we gapped to start the day above it and continued higher. So there is definitely a rush into Nordstrom's, and we're seeing the prices push up pretty aggressively in a stock that I just was frankly surprised to see do this well. And it's pretty cheap if you go back to today's class on PE and PEG. Nordstrom is in the bottom 15% of his historic PE ratio. So there's a real opportunity in this to see them go up a lot more than just simply retesting these previous highs. All in all, as I'm watching this market, if we're seeing the excess volatility, we can see that money has moved into utilities and away from consumer discretionary to some extent, but more so away from real estate despite the rate cut and into utilities as a way to create income. I do believe utilities are generally, in this type of market, treated as a substitute to bonds. So when we're looking for a fixed income type of trade, utilities end up doing quite well. And so as we're watching all these things, I want to find the safest plays, which are the ones that have the free cash flow, that have good PE or PEG ratios, that have a dividend payment. And that's where the stock market tends to shift during times of uncertainty. And we see that going on today in these stocks that we're looking at. So that's going to do it for me today. Join me again in the morning, where I will be joined by both Brandon and Don as we talk about this post-Fed volatility, retail sales, and how we might benefit from the next move on this triple witching Friday. Thanks for watching, and we'll see you in the morning.